Let's check in with all your business news now with Rachel Papazzoni. Rachel, happy Monday. Social media platforms are being scrutinised.
Yeah, the ACCC, the Competition and Consumer Watchdog, is going to be looking at social media platforms and seeing what kind of impact they have on advertising in Australia. They're looking at platforms such as Facebook and Google and analysing their impact on competition. As I said, the Australian Competition and Consumer Commission's inquiry will look at whether those platforms are exercising market power in commercial dealings to the detriment of consumers, media content creators and advertisers. The ACCC says most advertisers are spending less on print newspapers and finding alternative ways to reach target audiences, such as through digital media. A preliminary report is due early December next year, with that final report due in the middle of 2019. New data shows the number of jobs being advertised rose 1.5% in November. That's seasonally adjusted. It comes on top of the same percentage rise in the month prior, proving once again more jobs are being created. The data is collated by ANZ Research. It says the labour market performance has been robust throughout the year, with the concentration around full-time positions. The number of job ads has increased 12% this year, with jobs growth in all states. However, the old cry that wage growth is lagging continues and will likely form part of the Reserve Bank's interest rate decision tomorrow afternoon. Adani's controversial Carmichael coal mine in Queensland has been dealt another blow after one of China's major banks said it would not bankroll the project. The Industrial and Commercial Bank of China has joined the China Construction Bank in saying it won't finance Adani. In a statement, ICBC said it attaches great importance to its social responsibilities and keenly promotes green financing. Adani needs $2 billion in outside financing for the first stage of its proposed Carmichael coal mine in Queensland. One of Australia's leading authorities on the superannuation system has accused bank-run super funds of looting workers' retirement savings for profit. Wilson Tsai is the former head of research at the Australian Prudential Regulator Authority, or APRA, which oversees superannuation funds. He's described the government's move to target the non-profit super sector as bizarre. He says industry super funds are world's best practice and consistently deliver higher returns for members than retail funds. Confidence in Australia's agricultural economy is improving, according to the latest survey by agri-bank Rabobank. Confidence levels are rebounding from their 4-year low recorded last quarter. A resurgence in commodity markets has driven the positive sentiment, particularly for wool, lamb, beef and dairy producers. The survey found a third of farmers expect conditions in the agricultural economy to improve next year. That's double the figure in last quarter's survey. The number expecting conditions to worsen halved to 12%. Dairy farmers are particularly optimistic, with 51% expecting conditions to improve in 2018. And the Australian share market has moved very little today. Let's see where the numbers are at now. You can see the All Ordinaries and the ASX 200 about 4 points into the red. Metcash has reported a 24% increase in its half-year after-tax profit. It'll pay investors 6 cents a share. They've welcomed that news. Sierra Resources is higher after it secured a supply contract for 20,000 tonnes of natural graphite. Rio Tinto has announced Simon Thompson as its new chairman. He's been a non-executive director with Rio since 2014. The banks are having a poor start to the week, and Crown Resorts has hit a 2-week low. Maurice Blackburn has announced a class action against the company over a 14% loss in share price. That was when 18 employees were detained in China. Looking at Asian markets, and the Nikkei is tracking lower this afternoon. Hong Kong's Hang Seng is adding value after it had its biggest weekly loss of the year last week. Gold has fallen today. Right now, it's worth $1,273 an ounce. Oil prices are higher. The market has welcomed an extension of the current production cut agreement. And finally, the Australian dollar has been mostly unchanged today. It's worth about 76 US cents. And Kumi, that's the latest from finance.